Most people in crypto think of stablecoins as, well, kind of boring, right? Just a safe place to park your cash when things get choppy. But what if I told you they're actually the hidden engine driving the entire market? Today, we're going to pull back the curtain and unlock that potential. Just imagine for a second, what if there was a tool that could help you spot a huge market crash or even the beginning of a massive rally before it ever hits the price chart? A tool that's been hiding in plain sight this whole time. Well, that's the tool. Yep, stablecoins. Those simple digital dollars you've been using to just, dodge volatility, they're now at the very heart of a massive wealth transfer. And honestly, if you're not paying attention to them, you are missing the single biggest part of the picture. All right, so first things first, we need to completely redefine what we think stablecoins are. Forget the old definition. They're not just some digital holding pen for your money anymore. Their role has fundamentally, completely changed. So the old view, you know it, right? You convert your crypto to USDT or USDC and just kind of wait out the dips. That's the 101 level understanding. But the new view, the one that gives you a serious edge, that's seeing stablecoins as active capital. Think of it like fuel, ready to be poured into the crypto engine. And that's why this quote just nails it. Stablecoins are the fuel. They represent all the fresh cash pouring into the space. They're the main on-ramp for the big players, institutions, whales, you name it. And millions of everyday users too. Seriously, without them, the whole machine just grinds to a halt. And we are talking about a massive amount of fuel. Get this, the total supply of stablecoins has ballooned to around $300 billion. That's not just money sitting around doing nothing. Nope, that's capital parked on the sidelines, just waiting for the right moment to flood into Bitcoin, Ethereum, and everything else. Okay, so the big question is, how do we actually track this flow of money? Well, it comes down to a really powerful three-part strategy. These are the key metrics that, when you put them together, give you a crystal clear view of what's really happening under the hood. All right, here they are. We're going to break down three things. The stablecoin supply ratio, we'll just call it SSR. The total stablecoin supply, and real transaction volume. Trust me, together, these three are a game changer for market analysis. All right, let's dive into the first one, the SSR. The easiest way to think about this is like a balancing scale. On one side, you've got the total market value of Bitcoin, and on the other side, the total supply of all stablecoins. This simple ratio tells you exactly how much dry powder, how much cash is sitting there ready to potentially buy up Bitcoin. And here's the key takeaway, the part you really need to remember. When that SSR number is low, it means Bitcoin is looking cheap compared to all the cash on the sidelines. It's a sign that there's a ton of purchasing power just waiting to jump in. And historically, this has been a super powerful signal that Bitcoin, and yeah, the altcoins that follow, are getting ready for a major rally. Okay, on to metric number 2, total stablecoin supply. This one's a lot more straightforward. It's literally just the total dollar value of all stablecoins out there. But its power is in what it shows us, the direction, and just as importantly, the speed of new money coming into the whole crypto world. And wow, the flow has been absolutely incredible. Just this year alone, over 100 times billion new dollars poured into stablecoins. That's a huge jump from last year. And you gotta understand, this isn't just some number on a chart, it is a tidal wave of capital getting ready to make a move. So the takeaway here is super simple, but really powerful. When you see that stablecoin supply growing fast, it's one of the best leading indicators you can get for a bull market. And on the flip side, if you see that growth slow down or even start to reverse, well, that's your early warning sign that capital might be heading for the exits. And that brings us to the final piece of the puzzle, real transaction volume. And I can't stress that word enough, real. See, we're not looking at raw data. We're looking at adjusted data that filters out all the noise, all the automated bot trading, to give us the clean signal of genuine, human-driven economic activity. And the scale of this is just mind-blowing. In the last month alone, the adjusted real-world transaction volume for stablecoins was nearly $1 trillion. Let that sink in. This tells us that these aren't just tools for traders to speculate with. They are being used for real economic exchange day in and day out. Now, this is where you find that secret edge. Pay attention to this. If you see that transaction volume spiking, but prices are just kind of flat, that is often a huge sign that big investors are quietly buying up positions. This is the metric that helps you figure out if a market move is based on real adoption or if it's just a bunch of hype. Okay, so let's pull all that together in a quick cheat sheet. The SSR, that's for timing your entry and exit. Total supply, that's for reading where the money is flowing. And transaction volume, that's your confirmation that it's real. Each one is powerful on its own, but when you put them all together, that's when you get a complete picture of the market's true health. But it doesn't stop there. These metrics get even more powerful when you start connecting them to the major real-world events that are shaking up the financial world right now. I mean, just think about what's happening as we speak. You've got China reportedly looking into a yuan-backed stablecoin to challenge the US dollar. You have huge US banks getting ready to jump into the space, which could unlock trillions in institutional money. And on the while, those transaction volumes we talked about just keep smashing records. So you have to ask yourself, right? How do these massive global shifts amplify the signals we just learned to read? I mean, a new stablecoin from China or a launch by a major US bank, that would cause an absolutely insane spike in those supply and volume metrics. This right here is where the on-chain data smashes into the real world. Okay, so this all brings us to the most important part, the action plan. How do you take all this theory and turn it into a practical strategy that you can actually use, like today? It's a pretty simple 4-step process. Step 1, watch the SSR for market timing. Step 2, track that supply growth to see where the money is flowing. Step 3, follow the transaction volume to confirm it's real. And the final, crucial step, combine all 3 of those with breaking news to get the absolute strongest signal possible. And the whole point of this, the big goal, is to completely shift how you look at the market. See, while everyone else is just reacting to blinking price charts and all the daily noise, you'll be tracking the fundamental money flows that actually drive those prices. You'll be anticipating the market, not just chasing after it. So from now on, when you see that stablecoin supply jump, or you see transaction volume spike, you won't just see a number. You'll know exactly what's happening underneath. That's the difference. And that's how you go from reacting to the market to anticipating it. So the only question left is, are you ready to stop watching prices and start reading the money?